And hi everyone, welcome to another edition of Your Money Radio. Danny Stewart, Don Vandenbord, Hunter Bazingo with you on I think a historic week in terms of the markets. You don't get to say that very often, but this is a week like maybe October of '08. This is, it feels like maybe March of 2000. This is a huge week, and we're going to get into it here. And there's some things happening with the market that we're going to talk about with the VIX inversion. Markets look like they're falling off a cliff, but maybe they won't. We'll talk about that. But first, Daniel, what I think people forget about the markets and why Thursday, the 28th, yesterday was the 28th, right? We're taping this on January 29th. Okay. So the big thing about what took place on Thursday when they shut off trading in a number of those high short interest stocks, that people forget that it's an auction. The market is a price auction. When you walk into the bazaar of the stock market, like the old, like not bizarre, but like a bazaar, like, you know, like a market, and they're hollering out price, if no one can buy those stocks, what happens to price, Daniel?
Falls.
Yeah. And so when the auctioneer, you're like, well, somebody was allowed to buy. Yeah, not the people that wanted to. Very few people. So that's why price was quote unquote allowed to drift lower. That's a really big part of understanding. We talk about the price auction all the time in stocks, that it doesn't have to be news that drives price lower. It has to be the absence of buyers sometimes, and that's what you got. And when there's an absence of buyers, look out below because you don't know where it's going to fall. And it'll be really interesting to see what happens today. So if you look at like a stock like I've got up here, AMC in the upper left-hand corner, up until yesterday, let me pull something up here. Stock nerds can read this. Excuse the, it's at the bottom of your screen. Stock nerds can read that or pause the video. That's the explanation of what of gamma squeeze. It's long. I don't want to read it to you. There's a few typos in there. It was an email I sent out to a professor that had written to me about GameStop and wanted to know what was going on. And so, but what's going to happen is a lot of calls were sold short at $9 in AMC, for example. That's what happened. And so they allowed price to drift down below $9. I think it got down $7, and hopefully smart people covered, but I don't think they did. And so now you can see price is trading above $9. So all those calls that were sold short at $9, if they expire today and they weren't covered, they're going to get exercised. And then you have to buy those shares at whatever the prevailing price is. And that will absolutely drive price higher. And if that causes price to go higher for a bunch of funds that don't want to put up more money, or a bunch of traders that don't want to put up money, they're going to start selling the good with the bad. And understanding all this, I think, is crucial in this market environment, because there's going to come a day, and look, I'm not bearish stocks. Don, are you bearish stocks overall?
I'm kind of neutral.
Yeah, like I'm not like telling you the world's going to end. I'm just going to see what the charts are telling me. The best indicator I've ever come across is the VIX inversion. It's inverted. We'll explain that in a moment for all the new viewers. But you have to understand how a certain group of stocks is driving this action. And so would these stocks normally pull back? Well, we could theorize, but I don't think it helps. What helps to understand here is that this can get a lot worse for quote unquote high quality stocks. Like, nothing wrong with Apple's quarter, right? But yet Apple's pulled back from its 145 high. Nothing wrong with Tesla's quarter, but it's pulling back. Like, this is not the time to be rationalizing, I don't think, markets when you have the VIX inverted. And so we'll table that market talk there for now. But there was the new fella, Alex, who's joined the firm, had a question about AMC, and I am in AMC. So he asked, would you put clients in AMC? I said, no, hell no, I'd never do that. And the reason why is this, and Danny, you've had some people ask you about what, GameStop?
Yep.
And so look, you have to understand what we won't do is put you in those stocks. And there's a reason for this. It's not, it has nothing to do with whether you think they're quality or not. the volatility involved with these stocks, some of these stocks were down 50, 60% yesterday, and you were locked out from trading them. Often, it's not this way anymore, but when it was just Danny and I, a lot of people would come to us because we were their last line of defense from themselves, meaning they had taken some dings in the market. The market was really difficult. And we're the proverbial last line in the sand. Like you have to understand that with us, you'll never get 2008'd. There's very few absolutes in this world, but you won't ever suffer a March of 2000 with us. You won't suffer October 2008. The signs will be there. And if you're like, well, Tim, that of course you can say things like that, but you saw that in action in February and March of 2020 play out in real time. And you can go back and see all those videos. We never take anything off. So I'm going to mute you for a second. There's a, sorry, Don, there's this, okay. Yeah, now I can't get him unmuted, so I think I just kind of screwed up. Don, can you unmute yourself? I think I screwed up there. Perfect, okay. So there's real-time evidence of how we protect you from these market environments. In this market environment, there could be nothing. This could be just a passing blip on the radar and everything goes back to normal. But what if it's not? What if this is actually the start of the blowing up of a few funds that really does rock the markets? I'd rather have our approach right now than the hoping and the praying approach. And so we will never put you in AMC or GME or Best Buy, excuse me, Bed Bath and Beyond, unless they're until they're not manipulated is a strong word, until they're not stocks like they currently are. That well, doesn't.
If you got in at the beginning of the short squeeze when they were traded freely, that's one thing. But after you miss kind of that short squeeze, and then all of a sudden they start restricting you trading, buying or selling, and you can't either get in or out, and it's being manipulated. I'm not going to play that game. If I can't get
and that's not to talk down, because if anyone watched the video from Thursday night that I did, I want you to, I look at it like this. Danny and I have been, as long as I've known Danny, I've been a stock market populist. We start out the videos talking about how we're here to empower you and help you. And then at the end, if you would like our help or know someone that would like our help, we'd love to help you. But first and foremost, we're here to provide information and empower individual investors. And so if I look at what's taking place in the market space like this, that there's a group of traders out there that are saving brick and mortar stores. So at the height of a pandemic, when the retail public is afraid to go out and shop, you've got a group of traders out there that are buying the shares of Bed Bath & Beyond, they're buying the shares of AMC, they're buying the shares of GameStop, and they're saving these companies. And some of you might look at that as, well, how the hell are they saving these companies with a higher stock price? It makes your debt more attractive. And if you can raise more debt at lower, not crippling rates, you can do things. You can go raise money on the capital markets, but if your stock is $5, there's not much you can do. You're kind of screwed. You're going to get driven into oblivion. And the fact, well, Tim, some of these companies don't need to be saved. Stop being so cynical. Like a group of people want to put their money to these things and price goes higher, great. But the system on Thursday protected a bunch of traders trying to bankrupt a bunch of companies in a pandemic. So screw them. I hope all the funds go under. I won't apologize for that outlook at all. It's the most un-American thing ever. And so, well, markets go two ways, Tim. We need short sellers. Screw you. You can yell at Danny.
Short selling is one thing, but flexing your muscle and telling these big custodians and brokerage firms to not let people trade and trying to manipulate the system, that's at the very least unethical, if not illegal. There's investigations, people on the left, people on the right, there's people all over saying.
It's nothing to do with politics. It just has everything.
Right. No, I didn't mean to make it political. I'm not saying that. I'm saying you've got people everywhere that are screaming, saying this is wrong, this is unethical. You can't, just because the trade didn't work out for you and you took too much risk on leverage and you're getting in trouble, you can't go and try to coerce the brokerage firms to help you unwind your position.
But it does help to understand how this works a little bit more. And so instead of just fire and brimstone, how about we provide you a little behind the curtain facts? And all this you probably have searched out on your own if you're that curious about it. But if you haven't, what we're about to share with you does help. So the analogy I came up with on the morning phone call with Danny and Don was cell phones. And it's the only thing that popped in my head. Like, a lot of you are familiar with what used to be called Metro PCS or Boost Mobile. Metro PCS was with T-Mobile. They got bought by T-Mobile. Boost got bought by Sprint. And there's a rule that says in the cell phone world that if you start a cell, what's the old the senior citizen phone, whatever, Jitterbug. Jitterbug.
My grandmother had a Jitterbug.
Yeah, man, it's a flip phone. And so like they have service because the rule says that AT&T, Sprint, Verizon, T-Mobile have to open up their towers to these companies if they choose to start a phone company. And so we could start the Revere Asset Phone Company and go rent space from T-Mobile, and they have to do that by law. And so a lot of these brokerages like Webull or Robinhood, what they're doing is they don't clear their own trades. So trades are cleared at, you can self-clear like a Schwab does, or for some of their trades, or Fidelity for some of their trades, or you go through one of the big clearing houses like Citadel, and there's a couple others, Pershing, Citadel, and that's how your trades really get cleared. And so with the onslaught of traders buying more and more out of the money calls and stock in these heavily shorted stocks, the margin requirements for the brokerages, the people that are, the Robinhoods that are clearing their trades through Citadel, that requirement goes higher and higher and higher. And Robinhood, it appears, and maybe the story will get more ferreted out this weekend, Robinhood, it appears, didn't have enough money to cover the margin requirements for the trades their clients were putting on. Citadel, by law, by decree, has to have certain amount of money on their books from Robinhood to cover their people's trades that are coming through. Robinhood didn't have that, it appears. And I want to be real clear here. There's so much misinformation out on the internet right now. Shocker, it's the internet, right? But there's so much information, you have to be careful of what you take in. But what I'm telling you factually here is that you need a certain amount of capital on the books at your clearing firm. Robinhood appears to not have had it. That's why they raised $1 billion overnight from Thursday into Friday from their current investors. They had to go raise another $1 billion to make sure that they had the capital. And Danny, and I think this analogy works, and you'll have to correct me here if it doesn't, or clean it up if it doesn't, please. If Robinhood didn't raise the capital, this is akin to Allstate not being able to cover the claims after a major disaster. Is that correct?
Yeah, that's a pretty good analogy.
Okay.
I mean, what they'll do is they'll start liquidating lock, stock, and barrel, and they'll start selling off their positions or their clients' positions, and just get.
And by the way, you saw that happen at Interactive Brokers. You saw that happen at Robinhood. People just getting liquidated, and that's to protect the broker. And so imagine the calamity. Imagine the tumult, Danny, if Allstate went under. Like if they had to go into survivorship and have the government step in to fulfill claims. Or imagine if an annuity, like a guarantee annuity or some other company couldn't fulfill the obligations of the annuities. Now there's government protections that come in, but you would feel that ripple through the entire market space, just like AIG, Danny, when AIG almost bid it, right? Can you shed some light on this, on the ramifications?
Maybe too big to fail. See, that's the problem though with some of these hedge funds and some of these groups that are doing this. The SIPC insurance and some of the regulatory backstops, they only cover up to a certain amount. Mm-hmm. So it's okay for the retail guy and help them out, but it certainly would not bail out a big multi-billion-dollar firm unless we had another round of too big to fail or some type of bailout from. Yep. And I don't think there's a stomach for that. I think you'd see the general public get pretty upset about that for the second time around.
We won't know just how close some of the smaller players in the market maybe came to insolvency because of what they had. They didn't have the money to put up. So what do? You don't let them trade. This is far from over. We're early innings, I think, in this story. I don't know if we'll ever see a day like Thursday again because there's so much backlash right now, rightfully so. There's so much backlash, and they're gonna conjecture on my part, but I think that now that Congress is involved, they're gonna want somebody to be the perpetrator, right? Like they're gonna want somebody to take the
scapegoat. They need a scapegoat. They need somebody to. Yeah.
This is far from over, but I think what you'll see, I think the market is the truth arbiter here. If you see the S&Ps, the 500, or the Nasdaq, the NDX, or excuse me, the NDX, if you see that start to just crater, there's something else going on. That the distraction is, AMC and Bed Bath & Beyond and GameStop, but there's something more nefarious going on under the surface, and you just have to respect price, not your sentiment. And I think that's kind of where we're at right now. And so
well, give listeners a little bit of the background. I mean, we've got some new listeners all the time, and they may not, you got pretty technical, they may not understand the story, but really what happened was you had a bunch of big players, Wall Street types, hedge funds that were shorting GameStop and a few others. Mm-hmm. And the short was 40, 50% short.
GameStop was 157% short.
I don't know how you do that. How can you borrow more?
Leverage. That's the problem. They were leveraged more than there's outstanding shares.
Yeah, well, that in itself is going to get looked into.
Oh, but I bet you that goes away after this is all done. But go ahead.
Yeah, I agree.
So
well, that's factoring in puts, though, isn't it? It's not like they borrowed all the shares, but you can be net short 140% of the total company's value using puts.
I don't know if it's as simple. I don't know. So I don't know how they structure their leverage, Don, that way. Like when Melvin Capital is going to go short something, I don't know who structures how that deal is structured at all. It could be just they've got puts on, yeah, which is absolutely leverage.
Well, but the whole point, let's not get too deep in the weeds. The whole point is you had some big Wall Street types running in and hedge funds shorting this stock, thinking it's going under. And then some people got on some social media, Reddit, etc., and some kind of retired Wall Street types or whoever, like Tim said, there's a lot of misinformation out. But a lot of these people started to buy kind of Rage Against the Machine. It was almost like Occupy Wall Street, but those guys just picked it.
Hold on a second, Danny. Don, Rage Against the Machine, is that a band you like?
No.
You just, one word, mute, go back.
Oh, but so except these guys actually, instead of just picketing outside and camping out in front, they actually took action and they hurt them with their pocketbook. They started buying these shares. And when they start buying these shares, all of a sudden you get a short squeeze. When that happened, GameStop was up 80, 90, 100, 120%. It went up 200-300% in just a couple of days. It nearly, well, we don't know yet, like Tim said, it could have wiped out some hedge funds, but it certainly hurt them. That's when they went in and they started trying to manipulate the market to get out of their position to stop the bleeding. And yesterday, GameStop was down, 40, 50%. And then this morning, it was again going to have a huge pop to the upside. I mean, it's just a roller coaster now.
And so it's this bottom passage here that's really important to understand. So you get the normal short squeeze, but Danny mentioned options. And so when you're talking, so there's something called out of the money options. So in the money, like on AMC would be $13, $14. You're right at the money, or you're in the money. When you start, up until yesterday, they didn't have any AMC options beyond $10, which I bought options on Monday. I bought the 7s and the 10s, and They didn't have, I know this because I was like, I wonder how far I can go out. And I could only go to 10. I'm like, well, I'll buy 7s and I'll buy 10s. And yesterday they created, Danny, options all the way up to $40.
Oh, I was going to guess 30. Yeah.
No, all the way up to 40. And then let me tell you something. Do you know what the most popular strike is for next week, the subsequent week, and the following week?
25.
40s.
Wow.
So they're selling. So market makers.
There's a lot of real small players wanting cheap. They think the cheaper it is, the easier it is.
Here's how the squeeze works, Danny. Here's how the gamma works. So if a bunch of people, it doesn't matter if it's onesies or twosies, go in there and start buying the 40s. The market, and by the way, the market maker is charging $9 and $10 a piece for something that is what, $27 out of the money. By the way, they're pricing in next week a $28 move in AMC. Think about that. It's a $13, $14 stock, and they're pricing in almost $30 of movement. So
it's
theorizing
percent today at almost 14, and GameStop's up almost 70%.
Yeah. And so if what the market maker has to do is he has to sell you that call. And when he goes and sells you that call, that actually shows up as a negative on his books. So he has to go out into the open market and buy the shares. And so if enough people gang up and start buying out of the money calls in AMC, or this is what happened in in GameStop, and a little bit in Bed Bath & Beyond, that's how it's a self-fulfilling prophecy at that point.
Yeah, they got to buy it. They're buying the stock.
Yep. And all this buying comes in, and if somebody, God willing, was short, eventually the pain gets too much and they cover. And understanding that part of it. So what do? Just go out and buy out of the money calls? No, there's no, these videos are for what? Your edification purposes only, never ever to be misconstrued as advice. We're having a talk here. It's much different. And so in a normal world, out of the money calls don't use they're priced to look attractive. So you buy them, but there's usually no chance in God's green earth they get hit. And it's priced out in the market space accordingly. But in this situation, they've priced them out extraordinarily high prices because the market maker doesn't know what's going to happen, and that person or machine has to take that into account. It's going to be really interesting to see what happens at the close today and what happens on Monday with all these heavily shorted stocks. And the sell-off today, or the pullback today that you're seeing, could be firms making adjustments in anticipation of that movement. Who knows? It's all speculation. They don't send you a memo why we're selling off. So it could be a lot of things. And so with that, Daniel or Don or Hunter, do you have anything to add to the short discussion before I move on? Because I'm going to get into a couple other things here.
I read a good explanation as to how these supposedly smartest people on the planet can get themselves into trouble with seemingly one position. But so suppose you're a hedge fund and you're $10 million. The bank, because you're so smart, will allow you to lever up, let's say 5 times. So now you've got $50 million. But if you're a long short book, you can also go short $50 million, and it looks on paper as if you're neutral, when really, in effect, what you have is $10 million or $100 million worth of exposure and $10 million worth of capital. So it just takes a little bit of a mistake one place or the other, and then you've got to start selling the things that you don't want to sell because you've got to raise capital to cover for your one mistake. And when you're leveraged 10 to 1, and I'm probably higher than that in some cases, it can all come crumbling down pretty quickly.
You know, that's a perfect example. It's very similar to futures contracts. Everybody goes, oh, well, you put down $5,000. Well, you're really controlling $50,000 or $100,000 depending on the contract. And that's why the futures exchange, they mark to market every day. If it goes against you, you got to put up a little more money, or they credit you money, because you're not, that $5,000 doesn't secure $5,000. It's securing 50. It's just a very, very small down payment, and just a little move in the security can just wipe you out. By the way, Robinhood today just restricted Bitcoin. So they restricted trade, they halted trading on GameStop and AMC. And now they're saying we're not going to do Bitcoin for right now. They're scrambling to figure out what to do. There's already been class action lawsuits filed.
Oh, there's a lot there to unpack. One, I'll work backwards. There's a statement in Robinhood's user agreement that says you can't file class action lawsuits against them, but they did. There are class action. Yeah, Don, I'm not joking.
I know they would. You can't file a complaint against me. It says it in my contract.
Yeah, but how were they allowed to? I'm asking non-cynically. How were they allowed to file? I think they filed in Georgia.
New York, Florida, the number of states.
Your audit. Do you know, Hunter? I'm asking very curiously, like, who accepted that filing when it's in the user agreement?
I'm not sure. I mean, I've seen a handful of pictures on Twitter and other platforms of legitimate lawyers saying that they're working to put together a class action lawsuit. And I mean, the truth is, and the fact of the matter is they cost individual investors money, and lots of it. They forced sales for people. They didn't allow people to buy, which inherently drove the price down. So whatever loopholes they've developed in their user agreement and their contracts are going to be torn apart and analyzed. And I mean, I don't know in the end result, are they going to be able to actually charge them with anything? I'm assuming Robinhood, Citadel, and so on have already formulated their, worked with their lawyers to formulate how they're going to try and get out of this. But I think what's most important is the exposure of the corruption and the manipulation of the system. And I think that's really what became the end objective of this whole movement.
Mm-hmm.
And to the credit of the people who are buying GME, AMC, Nokia, so on and so forth, at some point, due to the actions of the brokerages and the regulators, it became no longer about money. If you go read these Reddit threads, they don't care about losing anymore because they want to stick it to the establishment so bad. And I commend them for that in a way, because that takes a lot of gumption. Because I mean, what's more important to people than their money? That they'd be willing to lose it all just to send a message. So I mean, I could rant about it forever, but I won't. But I think it's honestly very impressive, the stance that they've taken and what they've ultimately accomplished. And we'll see how it plays out over the next few months.
Hunter, that makes me feel better about the younger generation right there. The fix was in. And
it fires me up, man. It fires me up like you wouldn't believe.
They're saying I'm mad as hell and I'm not going to take it anymore. And look, this is like David and Goliath, and David just
not that we've talked this specific issue, but Danny and Danny would cringe when we used to do the show back in the studio. Like when I hate this industry. I've hated this industry so long. Danny, I feel like this is our moment. Like, we just haven't had the megaphone. So many more people collectively. Like, I want this to go forward. Like, I don't know who the dude at Melvin Capital is, but if someone can smack the smug look off of Steve Cohen's face, that'd be great. like they're just, there's no empathy.
When you say this industry, I want to be very clear. We're a fee-based only fiduciary advisor. We only not a broker, not a brokerage firm, and that's different. So when you say this industry, there's a small group over here.
You should absolutely Heisman that comment. Yeah, absolutely, Daniel. Just give it the old Heisman. I love stocks. I'll never not love stocks. I don't like how people in the industry behave, but we've been railing against this for years. Like, this is, who knew that 2021 could trump 2020? But it has. We're absolutely, like, we thought, oh, last year was historic. No, this is history. I mean, the amount, like, I don't think people understand. Like, Danny, there was that study, it's a couple years old now, that like 50 to 53% of Americans it's a limited number of people in America that are actively participating in the stock market. And most of it is 401k and IRA money.
Right. This is great though, because these retail investors were playing the game, and then the big boys who had the control or thought they had the control tried to turn them into patsies, making them get stopped out, getting them hurt, and then they still push back. They're not.
This is like watching an episode of Billions play out in live, in real life. And then, you know, I hope they keep going. You know, I hope, I don't know what change, well, Tim, what change would you want to see come?
I can answer that.
Go ahead.
People want transparency and fairness, and it's not okay that just because somebody has more money or more power or more pull or better connections, that they get to rewrite the rules and do whatever they want at the demise of the individual investor and the average American. It's completely unacceptable. So
Yeah.
I think that's what the end goal is, to force some change. And will we be successful? I don't know. But if you don't do anything, they're going to continue to walk all over us and do what they want. And I think that's kind of everybody's drawn the line.
Are you sure you're only 25 years old?
Hey, he's making me more and more proud every day we hired him.
No doubt.
When the political donor class when they're unable to make any more donations to buy off politicians and buy off judges. You know, I saw something online as I was just scrolling through. I mean, this is something that is so interesting. I'm quite sure there's a George Carlin skit or routine for every situation in life, but he does one, I think it's from his show in New York City, one of his more popular shows, where he's talking about that they've got you where they want you, they're controlling you. And I'm like, oh my gosh, this is absolutely the truth. I'm quite sure people who are older that watch this show and are more familiar with George Carlin's work than I ever am right now.
Classic.
Like, just, it's absolutely true. And, you know, if you think about, man, I don't want to make it political, but the controlling ruling class or the tech class in this country just had their moment to, they're all going to get thrown under the bus. There's nobody that's going to, I mean, was it the Thundercats or Voltron that would have, Hunter, help me out here, man. Was it Voltron that would come together in like a super, like they would all connect and like they were single Voltrons, but then they would come together and make one big Voltron? You familiar?
I'm not sure what a
Maybe
Voltron
let's go
is.
with Transformers. Like
Transformers?
yeah, like they would all join together and they would form like one big one.
It's I don't know what the name of it is. I just know Decepticons and
Yeah.
I don't know what the other name is.
But that's
I was
what's
a big
happening.
Transformers fan.
Like AOC, Liz Warren, Ted Cruz, they're all coming together to form this super beast, you know, and that super beast is going to step on the neck of Steve Cohen, of this Citadel, of everyone associated with Robinhood, and let them find a whiff of somebody telling you, stop the trading, we got to let my friends out. Whoa.
I agree.
Like investing. Go ahead.
They got all these groups. They created these online free brokerage young thing because they thought they could entice the younger generation with, you know, free trades and make it easy and user friendly, because they thought they could control them and they would make them lots of money, and they would take the money out of the pockets of these young inexperienced traders. And the exact opposite has happened.
You know, and so I don't want to go down the road of, because you could debate to the cows come home. Well, who's, you know, what rules are if rules and regulations aren't broken and there's no criminality, then to each their own, let them trade.
Well, then just give me one good reason why you halted trading. What was the reason?
Right.
Why can't you let me sell something? It was
the Twitter account of investing.com, which is not Investors Business Daily, but it's investing.com, tweeted out. See, this is the thing. I don't know if this was photoshopped or they really did it, but Stockner sent it to me, that the NASDAQ monitors online chatter and if they suspect something, they'll halt trading.
I believe that was for real.
Okay, you saw that then. Okay.
From the NASDAQ chair or whoever.
Yeah, yep. Okay, we're talking about the same thing.
I mean, essentially what happened yesterday and what's happened, I guess, over the course of this week was more or less an attack on the free market, because you can't only allow people to sell. If someone wants to buy GameStop at $1,000, that's their prerogative, and they should be able to do whatever they want. Are they gonna maybe lose money? Sure, but there's no one should be able to tell you what you can and cannot buy, or determine the price of assets for you. And that's the issue. Is they make it apparent that this isn't a free market and they can do whatever they want, and they've got to be held accountable for it.
The game has been changed forever, and I'll tell you what, man, I bring it all. Danny, I am so for what's happening right now. Like, it's like Christmas. Like we've been championing the reform that's going to come, Danny. We've been championing. Like, why do you think we put out 6 videos a week, to include the one you're watching right now, and show you the trades, or do I even have it here? Like this spreadsheet of what, just to show you transparency, just to give you an insight. And cynical person out there watching might go, well, you could put anything on a spreadsheet or say anything in a video. Do you realize that the moment we don't tell the truth, we would have no clients? The clients would ferret us out. Like, true story. So Danny, when I was working at IBD, I was really still new there, and I was going on the road. I was all by myself, and I just doing things that people were telling me were not right. But I was coming because I was going on the road, I was traveling. It was 08, and nobody was doing those things. And I sat down next to Bill at lunch one day, and I said, Mr. O'Neill, do you have a problem with anything that's going on? And he looks at me and he says with a wry smile, young man, if I had a problem with you, the phone lines would be ringing in the room next door. And I thought, oh, he meant the phone call, the call center was right next to where we were. And he's right. Like, everybody would be calling and complaining. He goes, I'm not concerned. And I'm like, wow, that was talking about true autonomy. And I was like, whoa, okay, let's go. And so, yeah, like, we could do anything, but why would we? Like, man, I'll tell you what separates us from everyone is the transparency and the empowerment that we've been trying to give you. So we'll see what happens.
I would like to make one more comment before you move on to the next time. But here's the big takeaway and the lesson learned. Because we talk, I mean, forget about what the story and what happened. Why did it happen? And this is the big lesson. Don talks about it, Tim talks about it, Hunter and I talk about it. It's position sizing.
Oh yeah.
So these big hedge funds took a massive position, way more than reasonable, in 1 or 2 bets. They bet short. Doesn't matter whether you go long or short, but then they leveraged up and they were wrong and they got crushed.
Yep.
That's how you get crushed. Greed, or you think you're so smart that you got it figured out and it's a sure thing. Folks, there's no such thing as a sure thing.
I almost think I don't know about provoke Don, and I think provoke's the wrong word here, but tease Don to speak on this. The arrogance of throwing good money after bad, Don. Any thoughts?
That's all it is arrogance, because you think you're right, and despite the evidence that's being presented to you right in your face, with the bottom line being bright glowing red on your screen, you think that you're smarter than that, and you double down, and then you rationalize by saying, well, now it only has to come back a smaller amount and I'm back to even. And then it's only losers average losers. That's Paul Tudor Jones.
Only losers average losers. The price is true.
And everyone's done it. That's the thing. Everyone has averaged down and then and gotten burned. The worst thing that can happen to you, I think, is you average down and it works out. Like someone might say,
because then you're confusing the outcome with the process.
Yeah,
and you had a bad process, but you got lucky.
There's also a thought to be made. I think we should talk about it like right now, because it'll Stockner surely has the thought. Well, what's the difference between adding to a position at the 21 and adding to a loser? And for me, if it doesn't hold the 21, you just sell the position. Like you can add on a pullback if you want to, but know the difference between a pullback and a sell-off. Don, what do you got? Or Hunter, take it.
Yeah, a pullback is when you own it. Or a pullback is when you don't own it. A sell-off is when you do.
I haven't heard that. I've never heard that before.
What
That's a
did he
good
say?
one.
I missed it. I missed it. I was actually looking at the chart real quick. What did you say
A,
now?
a pullback is when you don't own it. A sell-off is when you do.
Oh, I like that.
For me, it's the 21. If I own it, if I bought it at the 8, and it falls, and I have half a position, I'll throw the other half on at the 21. But if it doesn't hold the 21, I'm selling everything. I'm not doubling down, you know.
Yeah,
And so,
everything we have is risk. Everything we do is risk measured.
yep. And so that's a good point. Let's talk real quick. We'll do. I want to do VIX inversion because there's a ton of new people that watch the show. I want Don to talk about moves and markets. I want Hunter to do some research. We'll figure out the order here in a second, but real quick, folks, Revere Assets, where you go, talking about transparency, seeing this page, a daily market insight page, this is where every video that we've ever created is. And if you scroll down to the bottom of the page, there's a whole bunch of tabs to take you all the way back to the first videos we started doing in 2014. You can go back to last year and start looking at how we handled the market sell-off, how we started handling the market sell-off in February, at the end of February, in the March, and all the actions that we took. Danny gets asked, do you have any brochures, or do you have any back testing? These pages are the back test. If you are, and you should scrutinize, if you want to scrutinize, which you should, this is what you watched. And if you don't, and I always tell people, it takes about a month of watching our videos, like, because they come out you can binge watch them if you want, and that'll speed up the process, but it takes about a month to get a feel for what we're doing. We look at markets differently. And I'm going to tell you something. I've had more people contact me this week, from stock nerds and market lovers that I've met over the years, to people who have no interest in the markets. And it's just become blatantly clear to me that we look at markets in such a unique way that people that aren't familiar with our work, they're like, I'm sorry, what are you talking about with the chart? Like, just even talking about charts, and then how all selling is technical. And so give it some time. If you and look, if you have questions, right here is where you go. There's all of our email addresses. There's the phone number, 855-732-5932. We answer the phones on weekends. And then for me, look, you can email me. And the problem is the emails get long, but I prefer Twitter, okay? At TJ Razor is how you get a hold of me. And then on my page, I got to find it. This video, Danny, did you watch this interview? Did anyone else see this Chamath interview?
Oh yeah.
I started watching it, then I got a phone. I was going to go watch it this weekend.
I was enthralled with it. I thought it was fantastic. Hunter, what are your thoughts on it?
Beat 'em up.
Fantastic. I mean, him and Portnoy, I mentioned this to Don yesterday. I think bought themselves a lot of loyalty by siding and investing alongside these people in this movement, and then sticking up for them following the events that have happened over the last few days. So I think both of these guys are really smart for what they did.
1000% agree.
And donating the proceeds to charity if they make money on
to
it.
the Barstool Fund.
To the Barstool
for small
Fund.
businesses. Yep.
To help small businesses.
John and
Yep.
Jarian doing the same thing.
Yep. I'll tell you what, oh yeah, because he took the other side of Chamath's trade, I think, and if it works out, he's going to give the money. Yeah, I saw John's. I think he was on IBD this morning. Is that a true statement?
He was, yeah.
Okay. Yeah, this if you haven't seen it, it's on my Twitter feed. You just got to scroll down. It's great. It's everything that I think a bunch of people have been saying. And then there's a whole bunch of other stuff in here about the short squeeze. And then Danny, right here though, do you know where your kids were when they first had soup for the first time? No, I can tell you where I was. I was taking pictures of Remy. First soup. That's not something you celebrate in the Stewart household. What the hell?
He's from Texas. It's only chili.
Oh, that's right.
Chili and venison.
Soup is just, watered down little noodles or something. I don't know.
Watered down little noodles.
I knew there was a Daniism.
But if Dan did make soup, it would be the best soup ever made.
Danny made soup. What soup would Danny make?
Chili.
Is chili soup?
I guess, kinda.
Oh, Hunter.
Well, hold on.
It would be listed with the soups on a menu. So
From
yeah.
a technical term.
Did you ever see chili as a soup? Well, probably chilies you do. But
I'm asking. Well, they in the store they stock it next to the soups. Is chili? That's a great question. Is chili soup?
Chili's chili.
yeah.
When does soup become stew? What's that threshold?
That's beyond me.
That's the
Far
thick
out of my scope.
watered down with just little added, just a few little additives. It's
And
not.
what the hell is it, Danny? Is Texas chili? Is it have beans or no beans? Does chili have beans?
Oh, that's the real question. It goes both ways. So,
Because ever since I went keto,
so some people do.
I don't eat beans or legumes. And but Tanya makes really good chili, and she just took the beans out. And I swear to God, it's just tomato. It's just like sauce now. I'm like, I'm just eating a bowl full of sauce, and I'm like, I'm okay with that. By the way, I don't have a problem with that
Meat,
sauce.
right? You got big chunks of meat in there, right?
No, it's just ground beef and tomato-based whatever that is. That now I'm making it sound unappetizing, but I feel like I'm eating like a of ragu. Like but I like it, so I'm okay with it.
Sounds like you got that mixed up with tomato sauce. Yeah. Like spaghetti sauce, Tim.
Ah, man, do I love a good meat
It
sauce.
needs to be thick so you can like put a spoon in it, it'll stand up.
See, and I don't put crackers in it. I don't eat crack. You know what? I think today I'm missing a little bit of carbohydrates. Oh, by the way, speaking of carbs, Hunter, I've got a report for you. I went to CMG over the weekend because it's next to the phone store. Look at that chart, Hunter. Like, is that not the sexiest chart in the history of charts? Like, that thing is so beautiful.
And are they holding up well today? Yes, they are.
Like the cauliflower rice that lines the bottom of my bowl, Hunter, that chart of Chipotle is holding up. And by the way, the cauliflower rice, that's the report, Hunter, is freaking awesome. Everybody.
It is good.
Here's a question. Is a Chipotle burrito a real Mexican burrito?
I would say it's about as authentic as you can get here in America. And I've been to Dallas, Dan, and I've had some authentic Mexican food there, and there's nothing close in Alabama or in Florida, in my opinion.
Let me tell you
But
about the Mexican food.
I think it's fresh and good.
Hunter, everything north of San Antonio sucks. And let me tell you something else. I've got really strong opinions on this. The only good Mexican food in the free world, Hunter, is found in San Marcos, California, at Mr. Taco number 2.
Talk about El Taco number
And you go and get the carne asada nacho supreme. You get nothing else. No burritos, no tacos, nothing. You get the carne asada nacho supreme. It's the best meal. Like the Last Supper, Hunter, Jesus would go, you know what? I'll have that. And I'm going to tell you something. Jesus is still with us in spirit, but the Last Supper would not have been the Last Supper if they all had the carne asada nacho supreme. That's how good it is. I'm telling you.
That's what I had at this place in Dallas. I had carne asada, and I've never had anything quite like it.
Was it like in a good way or a bad way?
Incredible, like borderline some of the best. I think I also maybe had some skirt steak. It was awesome.
You remember where you went, Hunter?
I can't remember the name of it. I had a few margaritas at dinner, so that might be influencing my ability to remember the name.
We need to all go down to San Antonio, and then I'll
That
take
sounds good.
Real Mexican.
That sounds good to me.
And by the way, you do know, Tim, that tacos, burritos, enchiladas, that's actually Tex-Mex. That authentic Mexican food is like chicken and rice. It's healthier for you, and it's not as much.
Annie, this dish is so good at Mr. Taco number 2 that people like Mexico made it their number 1 meal. Like it's the meal of Mexico. That's how good it is.
I don't know. When I was in California, their Mexican food was too sweet and spicy.
All right. Look, Don is Danny's Twitter. So I prefer Twitter. Look, I've got a message in there right now. Like that's how I prefer you message with me. At TJ Razor, I put resources on there for you. Talk about stocks. You know, look, all transparency, man. Where's the
man?
What's that?
Frank Harambe needs a shave. I don't know who that is, but he looks like Sasquatch.
Who's that?
The guy over there to the left, to the right of Remy that I'm looking at. That Harambe Frank.
Oh
Harambe.
my gosh. I'm like, what the hell are you, I don't know who that is. You might like Sasquatch. That's what you're talking about? Yeah.
I just
Yeah,
noticed.
I might. Yes. Or chicken there. They have 0 followers. Oh, they're following no one. Okay. Anyway, so where's the Square trade? So what we bought Square. There it is. Put it right up there for you to see. Danny is at one Danny Stewart right here. He'll Danny, leave it to Charlie, man. He brought out a character from the past that we haven't talked about in years. JJ Snuffington. We haven't talked about JJ Snuffington the fourth.
He created a handle around him, or one of those guys did.
Yeah, like I haven't thought about JJ forever, but man, it is so good to see JJ getting pummeled by the markets, man.
For those new listeners, JJ Snuffington was like a Wall Street aristocrat type that we created, and then some loyal listener created a Twitter handle around him.
Yep, just awesome, just fantastic. So that's great.
Don't forget his wife, Buffy.
Yeah.
Oh yeah, I forgot about that. I forgot all about that.
Buffy Snuffington.
Yeah, and then he said JJ got a margin call, and then I jumped in and said, yeah, he got liquidated.
There is D Vandenbord on Twitter, and Chamath's a good follow. I don't know if Don you're following him, but
oh yeah,
Chamath's.
Yeah, I like him. He's gained a lot of following in the last couple of months.
Yeah.
He's the Bitcoin bag holder. All the Bitcoin lovers praise him, but he's done a really good job of gaining a following.
Didn't he say he wants to run for governor of California if they recall Newsom?
I think he's starting to. Yeah.
If Portnoy ran tomorrow, he'd probably get elected president.
Yeah, I agree.
Agree with that too. So let's see here. Where do we want to go? VIX futures. Oh, look at right here. Here's the put call ratio. This is the highest the put call ratio has been since the middle of December and towards the end of December. We'll see if it climbs. First time that the moving average has started to go higher. That's the start of a bottoming process. The new high put call ratio, because the environment we're in, is around 0.7. You can see we're trading 0.6. So I'll be real curious to see what happens here or with stocks, how much higher that climbs. But we'll see if that's all they got for today as the put call ratio starts to move higher. And then
we're also in the fear component of the fear greed index now. They've got it at a 38. I don't know if that accounts for today or not. I don't think so. I would imagine it'll probably get worse after today. But just for what it's worth, that's one I check every now and then just to kind of gauge sentiment.
Why don't you explain how that works? I don't know if we've ever explained how it works on the show. So go ahead, Hunter.
Well, it's almost essentially kind of a reflection of the put call ratio, right? If the put call ratio is through the roof, then you're going to be in greed. You got people buying left and right, buying super extended, over leveraged, buying on margin, etc. Which, obviously there is still, some of that within some of these heavily shorted names and people just willing to take a lot of risk. But I think the events of the last few weeks have caused a lot of people to be fearful, to start selling. And you've also seen maybe a lot of these big funds and institutions having to sell to cover their short positions and cover their losses, which probably adds to that as well. So it's just a way to, and I don't put a ton of weight into it at all. It's just something to check. I mean, if it's at a 99 greed, probably means, okay, maybe I should kind of take a look and see what's going on. Should I, just be cautious with adding new positions or things like that? So I mean, and if you go back to the March sell-offs, I mean, it was at full-blown fear. And prior to that, in the middle of February, it was towards the high end of greed. So it just kind of measures how the sentiment of the broader market is for the time being.
Awesome. And then, so here's the VIX inversion. So this is the best signal I've ever used. So you can see there's the current month, February, which has plenty of time left on it. March, it's trading above March, and March is trading above April. I only look at 3 months when looking at the inversion. And what it signifies is real simple, that if you're willing, like this has 47 days left on it, this has 82. And if you're going to rent something like an automobile, you would expect the current month to be cheaper if you're going to rent it for just 20 days. If you're going to rent it for 47 days, it would cost more. And if you're going to rent for 82 days, it would cost more. but you can clearly see that the shorter, in this example, car rental costs more than the longer duration car rentals over here. And what that signifies in the risk world is that professional traders, the traders that matter to the market, they think that something big could, the big word here is could, happen. So they're willing to pay more for short duration protection. And that's a big signal. And so if you're willing to pay more for shorter duration protection, something is off, and you want to be just, doesn't mean you have to go to all the cash. Doesn't mean stocks can't go higher. It's a signal, and it's not to be taken in absolution, but that is the signaling that preceded the big start to the meltdown in 2020. And so I can't remember the last time we had the 3-month inversion like that. It might have been springtime, rolling into March. I usually write all that down. I couldn't find it in my journal. So anyway, something to pay attention to. And as I do that, I want to transition to what Don's seen in the markets, some moves, and then even if we sell off, you got to keep, there's baskets of stocks working, and you got to keep your watch list up to date. And Hunter is going to give you a whole bunch of slew of good research to do that with. So Don, take it away.
So when I did the Wednesday's video, I noted that there was a change in the short-term trend from a positive to a neutral, because several of the indexes had broken the 21-day exponential moving average, and some leaders also breaking the 21. In fact, some of them breaking the 50. Thursday and Friday, you saw a lot of those leaders that bounced at the 50 or rally up to the 21, which is now rolling over, and they're failing at the 21. And that's a big weak signal. You would want to see these stocks get back above the 21 immediately. Some of them that broke the 50 just rallied back up to the 50, found a brick wall there, and they're rolling back over again.
Give me a couple names.
Yeah, pins is a big one. In fact, we just sold our pins in the last hour. Break of the 50, rally up, touch the 50 on Thursday, try to touch it again on Friday, didn't. Break Thursday's lows, gone. Also
Net
seeing some,
is another one.
Yeah, net.
Looks a little bit better than pins to me, just slightly, but still very similar action.
Okay.
Watch Roku. It's broke the 21, got right back above it on Wednesday, but it rallied up to the 8 and failed at the 8. So the stronger ones are failing at the 8 and rolling back over, and then tested the 21 again, and now it's slightly below the 21.
Yeah, these are all when the leaders get, as Don likes to say, Don, what's the significance of the leading stocks getting hit? That elite group of stocks that leads an uptrend.
Well, they lead up and they can lead down also. It's just like Darth Vader said in Star Wars: stay on the leader. They're the signal. We use the indexes, of course, because 75% of stocks will follow what's going on with the index. But the leading stocks are the ones that are going to really tell the story as to whether or not big money is selling.
And this is
and then you've got the added wrench this week of the big money being forced to sell. So it's another wrinkle that you have to add in and try to navigate. Not easy, but that's why people pay us to do it.
What else you got, Don? Anything else you want to talk about?
Big changes in the 21 over 21 list.
You got the video tonight, right?
I got the video tonight. At least half of it will turn over. And it may just be less than 21 over 21 list if I can't find enough quality stocks to, because a lot of them are under the 21 but still holding the 50. So they should be monitored very closely if they break the 50. That's all she wrote.
The 21 over 21, it will be found in Daily Market Insight, and that'll be posted Friday somewhere, I would think around 5 Central, 6 Central. You'll see it show up in there. All right. Is that it, Don?
That is it.
Okay. Hunter, what you got, man? What you want me to pull up for you?
I've got some good stuff here. So first thing, Tim, do you mind pulling up MSTR, MicroStrategy.
Yeah.
And I want to talk about it because this is a company that essentially has become a play on Bitcoin. But before I get into that, I'd like to just kind of provide a little insight into what it is they actually do. And this is directly from their website and researching them as they provide powerful software solutions and expert services to empower individuals with actionable intelligence. They're an enterprise software company. They claim to be the only analytics and mobility platform in their industry. Customers include Coca-Cola, Chipotle, Johnson & Johnson, Lowe's, Starbucks, Netflix, and more. But what really makes them interesting here is, at least as far as the most recent data I can find, they own about 70,500 Bitcoin, or 70,470 to be exact, which translates to about $2.7 billion in Bitcoin as of current prices, maybe a little bit lower as Bitcoin's pulled back from my calculation this morning, maybe closer to 2.5, 2.6. But really what I think is most interesting here is when Bitcoin topped at 42,000 roughly and pulled back, they had about a 30% pullback. And GBTC ran up to 48.93, I believe, and ultimately had about a 40% pullback. Well, while that happened, MSTR only had about a 21% pullback, bounced off of the 21-day exponential moving average, and then today they're outperforming Bitcoin. So for the time being, I don't know how sustainable it is, but at least looking at the most recent example we have, they have moved with Bitcoin and did not get sold off as hard and have outperformed today on a day when Bitcoin has done pretty well. So I think that's worth noting. And there's not a ton of companies out there that have said, we're going to throw $2.5 billion at Bitcoin. But they're proud of it and they owned it, and obviously it has benefited their stock. So just something to show you guys is maybe a different way to play Bitcoin. Obviously, Don and we talked about Silvergate, which operates the Silvergate Exchange Network. They've had a good day today as well.
I had Uncle Tony ask me about Silvergate.
Yeah.
Yeah. Oh, you know
It
what?
ran up to 102 today.
Have not had a Mark from Buffalo sighting yet. So let me get that out there.
I feel bad for him. That was a tough loss against the Chiefs. I'll throw that out there. But you can't stop Mahomes. So.
You taking Mahomes in the Super Bowl?
No, if I was to bet, I'd bet on Tom Brady. Just my personal opinion. I've been a big Brady fan for a long time, and all of my friends told me he was garbage and he's washed up and he should retire. And I told him to basically go screw themselves, and he's still the greatest. And lo and
You need
behold,
better
he's in the Super
friends.
Bowl. Look, these are friends that they don't listen to facts and they don't believe in statistics. So I can't put too much weight into their opinions.
I stand by my prior statement.
So what does Silvergate do?
They operate a cryptocurrency exchange network with some of the biggest crypto clients out there, Coinbase, I believe BlockFi, and some of those. And so obviously they benefit from increased transactions on their exchange. And I would like to make this comment, and it's purely my perspective, but perhaps the events that have transpired over the last few weeks and the actions that brokerages have taken and regulators have taken are going to encourage people to move away from assets that are regulated by these people or controlled by these people, and maybe push people more towards a Bitcoin or a decentralized assets, for example. And I think you've seen a little bit of that over the last 2 days with the moves in Bitcoin. Bitcoin has pretty much gone from 30 all the way up to 38,000 over the last 2 days, and I don't know what they're trading at right now. Probably closer to 36, 35.
Give me 1 second.
But it's just something to think about. Is this going to push people more towards cryptocurrency and Bitcoin, Ethereum, so on and so forth, for example?
Good to go.
And to me, that's a healthy consolidation on Bitcoin there after the big run up. I think it looks good. So
absolutely.
Next thing I want to take a look at here, Tim, is I want to point out two of the strongest stocks in the market over the last 12 months, really any time frame you want to look at. But Grow Generation first, GRWG. Granted, both of these are being sold off today as the majority of the market and growth names are. But these are stocks that have been for sure leaders that are now approaching potential buy points. Now, is the market conditions necessarily leading you to want to start a bunch of new positions right now? Probably not. But Grow Generation is approaching the 50-day. They actually got really close to it and kind of bounced off of it a little bit today. And then if you'll pull up CELH as well, Celsius, they have sold off and are now probably about 15% from the 50-day or so, broke through the 21. So I just wanted to point out two stocks that have been high flyers. They've been leaders. They've been strong on days when the market hasn't been strong over the last 6, 8, 9 months, that are now starting to pull back, and maybe they need to consolidate, maybe they don't, but they are nearing buy point. So I wanted to point that out because that's something I'm watching closely. And next, will you please pull up my baby, DraftKings, DKNG?
My baby.
It's taken a little bit of a hit today as well. However, it has shown a really nice increase in relative strength this week. It's had some nice up days. I believe an announcement was made on Wednesday, if I'm not mistaken, that their apps and their products are soon to be available for Android via Google Play. They've gotten a number of upgrades in the last few weeks. And so at least before this sell-off started happening, they were picking up some really nice relative strength this week and broke out above a key level, that 56 level, closed above 56 yesterday, and they actually have bounced off of the 21 today. We'll see if it holds. But I want to point that out. It looked like it was ready to get going. The nature of the market may put a halt to that. But it is one of few growth stocks still above the 21. So I think that's important to note as well. And last individual stock I want to point out here is FLGT. And I want to point this out.
I like this
because it has been an absolute monster this week in regards to relative strength. I mean, you can look at the chart. It has just
Hold on, Hunter.
blown everything out of the water
in regards. I'm going to hurt myself a little bit. I probably closed that a little too soon, Hunter. FLGT. 63.65. So
and now where are we at today? Pushing 110 almost.
Yeah, just
105.
Yeah.
Yeah. So it's very extended right now, but for whatever reason this week it has just dominated in regards to relative strength. It's like it doesn't care what's going on with the market. It just keeps going up. So I wanted to point that out because it's important to take notice of those kinds of things. And then last couple of things I got for you here, two commodity type groups or sectors that have actually held up this week and are still holding up okay today. Will you pull up SLV?
I was about to say, you're going to pull up silver? Sure.
Yeah. So, and this may be in part due to the Reddit crowd getting a hold of it and thinking that it's one of the more manipulated commodities. There's people short it. And so it's actually got, I mean, if you look at the volume bars for the last 2 days, they haven't had this much volume on a green day. I mean, across pretty much my whole time horizon here on a daily, going back all the way to October of last year, or no, that's October of 2019. So there's been some serious volume. I don't know if it's sustainable, but I mean, the last 2 days, it has really moved. And today it's up 1.5% on a 330% increase over average daily volume while the market is selling off. And the next thing, Tim, is DBC. This is the Invesco DB Commodity Index. You can see it's actually had a nice little run. Obviously, this isn't a growth stock per se, but it's had a nice run up from about 1248 going back to October 30th, kind of when all of the small cap and those types of names started to make the runs, oils. But it is still above the 21 and it is green today. And when you compare it to a lot of the other ETFs or sectors for the course of this week, they're still up this week. So just something to take note of. I was just going through trying to find what has held up this week better than everything else. And these were two that stuck out. I mean, when you go through, I probably went through about 90 to 100 different ETFs that are placed across all kinds of different sectors and industries. And very, very few were positive for the week. And these were part of that few. So that's all I've got pretty much in regards to research.
All right, Danny, I want you to take us home, and then I've got one last thing to talk to stock owners and market lovers about.
All right, folks, if you like what you heard, please tell a friend, tell a neighbor, just send them to reviewasset.com. They can go to the subscribe button and put in their email. and we won't spam them. We won't reach out to them in any way. It's up to them to reach out to us if they want our help, but they can get all the free research we put out. It'll go directly to their inbox every night. We'll do the daily market insight, and they'll get this podcast delivered right in their inbox on Saturday morning or whenever we push it out. There's also a webinars button that Don does a lunch and learn. He hadn't done one in a while because we've been very busy, but when he does them, they're about an hour long on Wednesday at noon Eastern time. And even if you can't attend working, he'll send you the recorded podcast, but it's always about a topic or something in the markets, live when the market's open, and you can ask Q&A at the end of it. You can email any of us with questions, Dan at revereasset.com, Don at Revere Asset, Tim at Revere Asset, Hunter at Revere Asset, and now Alex at Revere Asset. We're going to try to debut Alex next week, bring him on so people can lay eyes on him and feel him out, see if he knows what he's talking about too, as well. You can also call us old school at 855 Real Wealth.
All right, I think
But
the market.
I'll go ahead and mention the next webinar is going to be February 17th on a Wednesday.
Oh, Big Don!
There you go.
And the title is going to be 2020 When Preparation Meets Opportunity. We're going to review how we handled the market at Revere in 2020.
If you want that, just go to webinars, click that link, and then there's a sign up right here. So Don will push you the meeting, the webinar link as soon as he creates it. If you want to join Don live for that class, just listen. If you can't join him live, still email him because he'll send you the video as soon as he's done. So,
and if you've joined the list over the last 18 months, once you're on the list, you don't come off the list. You'll either, if you're on the live list, of course, you'll get a link to sign up, and you have to confirm that. But if you don't attend live, you will get a copy of the archive.
Perfect. Absolutely.
So,
All right.
Don, did you finally set on a date? Because I kind of been shaming you the last couple of weeks. You hadn't done one in a while. You signed
I don't pay any attention to anything you say, Dan.
So
have some fun with Revere.
So I think the market, to say the market hinges on this, I think this is a component of what's going on in the dollar. It's one of the most heavily shorted instruments out there. And if the dollar is trading above the mean here. And so here's the 21 exponential moving average. And it's kind of just bouncing now back and forth between +1 ATR and the mean. But if the dollar were to explode higher, it's my thought, it doesn't have to happen this way, that you will see stocks go lower. And that has a lot to do with international exposure and the power of the dollar. And, you know, the whole, I kind of alluded to it earlier in the show that all this short stuff in the markets, it may just be like, hey, look over here, there's something going on, but really the main story is over here. And the new administration is thought to be a strong dollar administration, whereas the previous administration was a weak dollar administration. And if the dollar does gain strength, that's going to be difficult for stocks to move forward. And if inflation or interest rates continue, if the interest rates, like, and you can measure it by looking at, say, the 10-year Treasury index, if this price keeps going higher, or and that just translate that to yield, keeps going higher, that's going to hurt markets as well. And that has a lot to do with the fact that, Danny, I don't even know what the calculation is. Every time interest rates go up, it costs our government more and more in interest payments. So they don't want to see interest rates go up. Can you say that more succinctly than I just did?
Yeah, it's a deficit. It causes a deficit to rise.
Yep. And so, yeah. And so let people start saying that we need to have deficit, spending controls when the market clearly likes stimulus and tons of government spending. So there's a lot going on in the background, not just this short story, that you can look at interest rates and look at the dollar and just kind of theorize for now what may be setting up in the future. Take us home, Daniel.
All right, folks, forget George Carlin, the comedian. It's Rodney Dangerfield. I don't get no respect from Don. We'll talk to you next week on Your Money.